Hello, everyone. I'm Ron Corser with Cornerstone Retirement Partners. Welcome to this program here today. We're going to have an interesting conversation. So in some ways, I say, if you're afraid of vampires, bring out the garlic and the crosses, because we're going to talk about insurance. We're going to talk about life insurance. We're going to talk about annuities, and we're going to talk about what really is insurance. And I was brought into this business about 30 years ago, coming off the tail end of an idea that was, well, you don't need life insurance so much. You just need to buy term and invest the difference, whatever that meant. What it really meant was, for those people selling term insurance, they made a lot of money. The term insurance had an extended period to live, and then eventually it died. And they found out that people didn't invest the difference, they spent it. So that was a kind of an approach to insurance that didn't work. But let's just focus on, why do we need insurance in retirement? And again, I'm Ron Corser with Cornerstone Retirement Partners. You can reach out to me at 616-301-2581, or go to our website, www.cornerstone-rp.com. Put your information out there. We'll reach out to you, give you the information you need to make good decisions. So let's talk about insurance. Most people, when they talk about insurance, the first thing you do is they make the sign of the cross. When I first got into this business selling life insurance, I couldn't even get my best friends to have coffee with me like we had before I got this job, because they were afraid I was going to try to have them buy insurance. And that was that's not what I wanted to do. But think about insurance. In some fashion, everybody has some kind of insurance. What is insurance? It's simply a way of protecting yourself against a catastrophic occurrence by paying another company, an insurance company, to take on that risk. So you spend a few dollars, a few cents on a dollar to push that risk away to somebody else. Think about all the insurance we have. Yes, we have car insurance. Yes, we have health insurance. We have homeowners insurance. We have renters insurance. We have pet insurance. We have all kinds of insurance, life insurance, medical, Medicare, all those things. They all serve a purpose. And it always gets down to two questions. What is it I want to protect myself from? And number two, what is the best approach for me to take to get that protection? Now, let's think about the risk involved in all the things I talked about. Ultimately, insurance says somebody else will take care of the bulk of the claim if something bad happens in your life. It's really simple. So you have to figure out, I guess, that Dirty Harry movie, how lucky do you feel today? It really gets down to that, doesn't it? At least I think it does. So when we talk about insurance, we're going to push aside car insurance and homeowners. That's pretty normal stuff. People have that. Let's talk about two kinds of insurances in this program. One is something called an annuity, and another one is something called life insurance. They both do certain things really, really well. And they both do certain things really, really poorly, because they're not designed to do those things in the beginning. So let's talk about this. Let's back up for a moment. Let's talk about an annuity. What in the world is an annuity? We've heard on radio programs and advertisements how they're terrible and evil things. And I will say this, if every problem you have in your life is a nail, then the only solution to that problem is a hammer, isn't it? So there's a lot of financial things that we have to deal with in life. And one of those issues is, when I get to be retirement age, how am I going to get the most predictable, guaranteed income I can get out of a combination of Social Security, life insurance, pensions, all of that stuff? There's not a single human being I've ever met, and I've been in this business 30 years now this year, who, if I said, would you like to have a pension? They wouldn't just raise their hand and say, absolutely. Because who wouldn't? What's the advantage of a pension? I know I'm going to get money for the rest of my days, as long as I live. And as long as my wife's alive, she's going to get it too. There's a certain amount of comfort in guaranteeing that. So what happens if you don't have a pension and you have saved all your life through good years and bad years, tough years, and you've got expenses, raising children, putting braces on them, dealing with maybe some health issues, things that cost money in life. And you're getting to retire and you're trying to figure out, how do I get the most money that I can rest assured coming in every month? Guaranteed, if you will. I know I'm going to have Social Security. That's pretty much guaranteed. But what else do you have? And the answer a lot of times is, well, I have my 401k or my IRA. And we know that we can take income out of those two accounts. We know that. But what's the potential downside to having a stock market-based retirement savings account? Is that a third of the time the stock market goes down. Nobody likes that. I don't like it. I don't have a single client who likes it, but that just seems to happen. And we have good years on top of that and bad years. What we hope is that we don't have a catastrophic failure like we did perhaps in 2000, 2002, and then the really big one in 2008 and 9. That's what we hope we don't have. But with a stock market-based account, it's pretty hard to protect yourself against all of that. So one of the ways that's available to help you put predictable income that'll last as long as you live into your retirement income plan is to consider the use of an annuity. Now, you can consider the use of annuity for a lot of things, but here's my suggestion. Look at it as doing one thing really, really well. And that is, it's a vehicle, it's a savings account with an insurance company that will allow you to generate income that you can't outlive, no matter if the market goes up, down, sideways, no matter what happens. You'll always have that money coming in through the proper use of an annuity. That's what it does really well. What doesn't it do really well? It's not a substitute for the stock market. And too many advisors sell it that way. What an annuity is, and I'm not talking about a variable annuity, but a principal protected fixed annuity, it's a substitution for bank money. It's a way to use a certain amount of your life savings to generate a lifetime of income that you cannot outlive, and that if properly structured with some companies, that will even go up over time to take care of a little bit of the cost of living and inflation. Never ever use that as a substitute for stock market investing. People do that. I mean, salespeople say, well, do this, it'll protect you from losses. And if the market goes up, you'll be able to go up. Ladies and gentlemen, you're not going to make 25% on a fixed annuity. Simply not going to happen. It's not designed to do that. It's like saying, I'm going to take my 1959 Chevy and I'm going to go to the Indianapolis Raceway and I'm going to join the 500 and race my car. It's not designed to do that. And anybody who says it is probably not being fully, transparent. So an annuity does one thing and it does it very, very well. It allows you to take a certain portion of your life savings and create a vehicle which will ultimately give you income for as long as you live. And what I tell people when you use them, let's say you put, $100,000 in one, and you live to be 147, and that account goes to zero. They will still continue to pay you money. And when I've said this to clients, sometimes we've talked about it, they say, well, that sounds too good to be true. I said, no, it's not. You need to understand something called mortality credits, and that's the subject for another conversation. But by and large, the best institutions to manage a lot of money on a long-term basis is a life insurance company. Flat out can do it. So use of an annuity might be right for you listening to this program. It might not be right, but you need to understand what its limits are, what it does really, really well, and what it doesn't do worth a rip. And that's where the rub comes in sometimes. Now, annuities can be used in a couple other ways. Number one of the big concerns that folks have, and if I'm touching a soft spot here and you're interested, give me a call. I'm Ron Corser at Cornerstone Retirement Partners. Give us a call at 616-301-2581 or go to our website, www.cornerstone-rp.com. put your information in there. We'll provide the information you need, whether it's on annuities, life insurance, anything else in terms of financial issues. We'll give you that information so you can look at it and make a really good decision for your family. So let's talk about this other thing that's always on the mind of those of us who are getting close to retirement or in retirement and we're above 60. That terrible thing called, what if I have to go to a nursing home? Let me take some of the burden off you right now, all right? The majority of the care for long-term care kind of issues to actually take place in the person's own home. A little over half. You can qualify for long-term care and still be cared for in your home. That's where most people want to be cared for. But it still costs money, whether you're being cared for in your home or in assisted living or in a full-blown nursing home care. And the issue is, you're going to pay for it. I'm going to pay for it if I have to have that care. If I live long enough, I'll probably have that care because I've had 7 body surgeries and I got a lot of arthritis. So chances are I'm going to need help putting on my socks someday. But if you need care, you're going to have to pay for it. And I know everybody has a daughter or a son who'll drop everything they need and have going on in their life and come take care of mom and dad. I frankly don't want that to happen. My kids got their own problems. They got their own kids, my grandchildren to take care of. I can take care of myself. But sometimes I may need help. So if I do, having a plan in place is part of my retirement plan. So how do I handle the issue of needing some sort of custodial care? It's going to be expensive. You're going to pay for it with the money you've saved, or you're going to pay for it by pushing off some of that risk to an insurance company. And an annuity can be used as a vehicle to multiply your dollars that you set aside for long-term care. So an annuity does 2 things well, we know. Number one, they give you income that you can't outlive, that'll last as long as you do. And 2, some can be properly structured to give you a long-term care benefit along with income. And a stock market program is not going to simply do that. So those are 2 things annuities do well. And if those things are important to you, if you're dealing with an advisor or you want to talk to us about it, give me a call because we'll go through the ups and downs, the good, the bad, the ugly of everything, because we do that all the time when we do reviews and also meet new people. It's important to understand that no single financial product does everything perfectly. It doesn't. So you have to find a mix that works for you, given your particular needs and how God ever created you. So that's an annuity talking about. So if I've touched a little soft spot here with you guys, give me a call at 616-301-2581 at Cornerstone Retirement Partners. I'm Ron Corser. Or go to our website, www.cornerstone-rp.com. Put your information in there. We'll reach out to you and help you. Now, the last part I want to chat about here in terms of insurance is life insurance. And there's some really famous people out there on radio that say, well, you don't need it in retirement and you don't need it. You just need to buy term and that's the difference and everything's going to be wonderful. Here's a question. If you could have as much insurance, life insurance as you wanted and never pay for it, how much would you want? I know how much I'd want. I'd want a lot. I really would. But it does cost some money. So let's think about it. Why would somebody have life insurance? It's easy to say when you're young and raising your kids. We had 2 children. We were young. We had no money. We had to buy life insurance because I was always worried about taking care of my wife and our kids. So we bought life insurance. I bought some cash value life insurance and I bought some term insurance because they both had kind of different needs. For example, when my son and daughter were college age, and they were about 2.5 years apart, I bought a 10-year life term policy just to protect them and their college costs. It was very short. I didn't want a 30-year policy. I wanted 10 years, hoping that they would get out of college before then. But it was designed to make sure that they could have their college paid for. See, that's a specific use of a life insurance product. And it did it really well. I mean, I didn't die. My kids got through college. So it ended up, we just kind of ran out of time and it got canceled. But that was the purpose of it. Now, I also bought life insurance, cash value life insurance, that I bought when I was a little younger. And I bought some of it when I was a little older. Why did I do that? For a couple of reasons. I still want protection for my wife. I still want to be able to create a legacy for my children and my grandchildren. And life insurance is the single greatest thing to do, because when you die, it goes tax-free to whoever you've designated it. So creating a legacy. So we talked about that. We talked about just the 10-year thing for college. Create a legacy. There's another important use of life insurance that often gets overlooked, and that is a great vehicle to help create a long-term care bucket of money for yourself if you need it. It's a great vehicle to do that. Yes, you have to put some money into it. Yes, it's life insurance. Nobody likes that word. It's a long word, 2 words. It really has a 4-letter word connotation to it. But that's what we have. So a life insurance product can be structured to create a legacy for protection for your family, or short-term issues like college, or it can be created to give, yes, I want to create some lifetime income too, because life insurance is a great vehicle to create tax advantage, cash tax-free life insurance if it's properly structured. You can do that. The other thing certain life insurance contracts can do really, really well is create on day one a great big bucket of money to cover your long-term care expenses. So if we think about life insurance in a lot of ways, it's a legacy product, so it can be used for specific issues, but it's a really good vehicle for creating tax-free money, cash flow, and it's also a really great vehicle to create a long-term care plan for yourself or your wife. Those things are really good for it. Now, do I say you put all your money in life insurance? No, I'm not telling you that. What I'm saying and trying to help you understand is there's a lot of things out there in the financial world that if somebody helps you understand what they do well and what they don't do well, you're going to be put in a position to make really sound financial decisions for you, your family, your children, and your grandchildren going forward. So we've touched on a couple issues of insurance. And think about this. Insurance is just another way to push the risk of something really bad happening onto another company. They pay most of the bills. You don't. That's what it does well. And everybody should have some sort of insurance in their life. And we do. Homeowners, car, we do that. So if what I've said makes a little bit of sense, and I know we're all dealing with preconceived notions, even I got them, just kind of keep an open mind. Give us a call. I'd be more than happy to go through the good, the bad, and the ugly of life insurance, annuities, any other kind of insurance that's important to you, so that you can say, look, I looked at this, I made a good decision. I looked at this, I didn't want it. I looked at this, I realized I did need some sort of protection for me and my family. Because what's the worst thing that can happen? Is you look at your wife, she looks at you, you look at one of your kids, say, oh man, I wish I'd have bought some insurance to handle that. You don't want to be in that position. So again, give me a call. I'm Ron Corser, 616-301-2581. Or go to our website, www.cornerstone-rp.com. Put your information in there. We'll reach out and help you, give you the information you need to make really good decisions. So I look forward to hearing from you. I hope you have a blessed day today, and we'll talk again soon. Thank you.
Tune into Cornerstone Retirement Partners' full radio program, Your Course to Retirement. Visit cornerstone-rp.com for many valuable resources, including those mentioned on this show and other great episodes of Your Course to Retirement.
The content of this radio show is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. You are encouraged to seek investment, tax, or legal advice from an independent professional advisor.
Ed Slott's Elite IRA Advisor Group is solely an indication that the financial advisor has attended training provided by Ed Slott and Company, passed biannual examinations on material covered at conferences and in webinars, and met other membership requirements, and does not constitute an endorsement of any kind. Ed Slott's Elite IRA Advisor Group members pay a fee for the educational programs that allow them to be included in the Ed Slott's Elite IRA Advisor Group. Membership does not guarantee investment success. Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services.
Advisory services offered through Brookstone Capital Management, a registered investment advisor.
Advisory clients are charged a quarterly fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.
Any investments and/or investment strategies mentioned involve risk, including the possible loss of principal. Any comments regarding safe and secure investments and guaranteed income streams refer only to fixed insurance products. They do not refer in any way to securities or investment advisory products. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes.